Hi, my name is Bob Windmill. It's my pleasure today to take you through this seminar on managing your money. And in learning about managing your money, you'll learn about cash flow management and budgeting. My background, I think, is quite an interesting one. I've been in business for 30 years, working with people, sometimes as an employee, sometimes running my own business. I started up working for a water company, washing up test tubes in a laboratory, and ended up as one of their senior managers, which shows that humble beginnings are no bar to later success. And I eventually thought, no, I want to do something for myself and set up my own business. The fact I set it up at the beginning of one of the deepest recessions the world has ever had was a bit of a challenge, but I got through it, and now it's successful. In my time in industry, I had 9 jobs in 27 years, which probably proves I was doing something right, even if I didn't always know what it was. But certainly what people did appreciate is that I would look at a job, work out how to make it work better, actually make it work better, and then usually I got just a bit bored and wanted to give it to somebody else to look after while I went off and did something else. But that's just my nature. Other people are different. During my career, I've faced various challenges. One of them was I didn't have the right qualifications to get to the senior position I wanted. So at the age of 40, I went back to university and got an MSc in water science, because that was my job. A few years later, when I thought, no, I really want to specialise in people and managing people, that no longer applied. So it was back out with the books, off to university, and got myself an MBA. So the lesson there is it's never too late to go and get the learning and development that you need. At a personal level, like I've touched on, I like making things work better. As a young lad, I would take things apart to see how they worked. And sometimes I could even put them back together and they would work afterwards, but not always. My hobby at one point was racing motorbikes. When I started racing motorbikes, I was somewhere between bad and abysmal. If I didn't get lapped, I considered myself lucky. But by applying myself, watching other people, learning how to do it better, over the years I got better and eventually could win races and championships. And that was nice. The key point, though, was I had to apply and learn how to do it. And in your business, things that are a mystery to you today, I'm sure you will find with practice, like with managing your money, will eventually become second nature and you'll be good at it. What I found was that the same techniques of improving how I raced a motorbike worked at work. So I found I could go into a job, work out what was wrong with it, find out how other people went about fixing it, and then develop my own version of that. I think that's important. Don't copy other people, learn from them, and then find your own version of a solution. That's how you learn. What do I want from life now? I mean, as far as I can see, I've still got another 20 odd years at work yet, I hope. I definitely want to get more out of my pension pot than I paid in, so best I keep myself in good shape. But in the time I've got left, I want to do interesting work. And part of that is repaying the help I've had from other people. And in that time, yeah, I might be in the later stages of my career, but what I do know is there's lots more to learn and lots more areas for me to develop into. But the bottom line is I need to work to earn the money to enable me to live the life I want to lead. And I guess it's the same with other mentees on the program. Yes, you want to grow and develop, but you want to be able to provide the good things in life that you and your family want. And certainly from my point of view, making sure that my children have a better start in life than I had is very important to me. And that takes money. So I had to learn very quickly how to work with money and how to make money work in business. And that's what we'll be doing today. So we're having a webinar about money in business. Money is the lifeblood of business. Without it, you have no business. Yes, you need an idea, you need to know how to sell, and money used well enables you to do that. If you get it wrong, it will kill your business quicker than anything, even quicker than having a bad idea or not being a good salesperson. So what we're going to look at today is a wonderful thing called the money cycle. How money comes into the business, you use it within the business, and then the key point, you take some of that that's come in and reinvest it in your business. So the idea of a cycle comes in. And then the little bit that's left at the end is called your money. Just remember that wonderful check that arrives from your big client, most of it isn't yours. Most of it belongs to the business. So hey, just remember, your money is different to the business's money. And clearly, if you've got a plan for your business, you need to be able to say what you expect to earn, what you expect to spend over the coming 12 months usually. This is what we refer to as a budget. This is where you make your best estimate of what you're likely to earn and what you're likely to spend. And what we'll see later on is because you're making an estimate, it's not certain, you keep an eye on how it's developing. Where am I compared with where I expect it to be at any moment in time? So that's what we'll be working through in the next 30 minutes or so. So there we are, a quick re-summary. We're going to look at the money cycle, setting a budget, how you monitor the budget, and then I'll summarize it at the end. After that, there will be a period for you to ask questions that I will answer, or I will do my best to answer for you. I'd like to say I'll answer them all, but sometimes the questions are just too interesting and I need time to go and think about it. But I will always make sure you get a reply at some stage. So now we're going to look at the money cycle. The money cycle is this idea of bringing money into the business by selling products and services. Some of it you can take out for your own purposes, but some of it you have to keep in the business to pay your bills. And there's some terms associated with it. What I want you to do is think more about the principles that we're going to talk about rather than worry too much about, am I using technically the correct term? If you can remember the term, so much the better. So we're going to understand the money cycle, have a look at some of the terms, and then understand the difference between the business's money and your own money. Often what we have is we start with an idea. Perhaps we've done some research into it. We think, yeah, this would be a great product. I'm sure lots of people would want to buy it. Yeah. And you've done enough work to think, yeah, this is really a goer. And the end point, as we've said, is to generate money for you and your family to spend so you can lead the life you live. Now, at the moment, we've got a big empty space between the two, and that's not very helpful. So what we'll do is just have a walk through how you go about turning that initial idea into money that you can take away and spend. The first point is you do need to spend money. The key point along here is all the boxes in red are where you are spending money. It's money leaving the business, which brings up the obvious challenge that when you start up a business, you may not have any money and you need some capital. It's often referred to as your working capital or your startup capital. Ideally, it will come from your own savings and funds. You may need to borrow it. Either is cool. Yeah, we live in a real world. With that money, typically, you will buy tools, materials, you'll pay your rent on your premises, you'll pay your wages. If you're really lucky, you may even pay yourself a wage. Okay? Part of the point of this. Then, with the tools and materials, you'll make things. The example here is somebody preparing food, but it could be a company like mine that provides training and consultancy services. You may be reselling other people's stuff, but the point is you will need to spend money to develop the products and services that your people are going to buy. So you're spending again. Yeah. These are called your operating costs. And you're generating goods and services, the ones that you've identified in your idea and in your research that you believe people will want to buy. This webinar isn't about whether you can sell those or not, but it's about the money that goes behind them. So the assumption is you can sell these. Funnily enough, selling goods and services costs money as well, referred to as your sales cost. So if you have to advertise to your customers, if you have to spend time and money going to see business customers, that costs money, and you've got to have that in your back pocket. And the other little thing that people often miss is that if you are selling to another business, they will often make you wait for your money. So the example is, I have a contract with a private water company to offer them consultancy advice. I send them a bill at the end of each month, so that's the first 30 days gone, and they don't pay me for another 30 days. I have to fund those 60 days out of my own resources. And if you're selling to another business, you have to do that. And you have to have in your budget the different times when you expect to send out bills and invoices and when you expect to get paid. And this is the area we'll talk about after the money cycle when we talk about cash flow, how cash flows into and out of your business. So having sold your goods and services, hey, we get paid. Great. This big fat check comes in. But remember what we said earlier. Lots of it isn't yours. Some of it, oh yes, key point, this is what's called your gross profit. It's the big check that comes in. First thing you're going to have to do is reinvest in your business. And looking at the hashed line, some of it will go back into paying the bills for tools, materials, rent and staff. But equally in business, life doesn't stand still. Life changes around you. The product you're making and selling today may not be a great product to buy and sell in a year or two's time. So you need to put money into doing more research about ideas. And that costs real counting, hold in your hand and count type money. Right? So you need to put it aside. Then there's this terrible thing called taxes. Now, I can't speak for anyone else's tax regime, but in the UK, this big check arrives. The first thing my government wants is the top 20% in sales tax. This really takes the shine off it. Okay, it's the law, you've got to do it. Yeah. If you've had to borrow money at the start, you have to repay it and pay interest. And you have to do that. You've signed a contract. There is no option. If you miss your payments, you will ruin your credit rating, and the bank may take legal action against you to recover the money. It's almost certainly in the contract that if you miss a payment, the whole lot becomes due there and then. So don't do it. Big point, that money leaves the business. It's not like the money you're reinvesting, it's gone. And only at that point do you actually look at what you've got left and say, hey, this is mine. I can take some out. Yeah, that is the happy moment. Yeah, that's great. This is what you work for. This is the whole point of doing it. Unless you happen to just like being in business for fun, which is a trifle unusual, you want to get to this point. So just looking along that line, the key message is, look, you've got to spend money to make money. And you've got to make sure you don't take too much out of the business, that you can't pay your bills when they are due, and that you don't have enough money to develop new ideas for your business. We've touched on cash flow. This is money coming in and out of the business. And it is literally that. Money comes in, money goes out. If people paid you up front for what they wanted you to do, life would be perfect, but they don't. You've seen in my example, they say, yeah, we want you to come and work for us for a month, and we'll pay you a month after that. So every time I drive to their offices, stay in a hotel, buy something for them, I have to fund it and claim it back. So I've got cash flowing out. This is it. You have to spend money before you get paid. Big point, if you've done the work and haven't been paid, you still have to pay the bills that you've signed up for. Hey, this can get scary. But if you plan right, if you look at your money cycle and think, yeah, the big check that comes in, how much do I actually have to put aside? You look at your budget, you think, what am I expecting to spend next month and the month after? Take that money aside from your initial sale. Life will be good. Try and cut corners. Life will be painful. I know, because I've tried both ways and only one of them works. You can work out which one. And the final thing is you hear of businesses going broke because they have what's called a cash flow problem. And it's literally this. The bills are due and there's no money to pay it. You can see a business that has a full order book. You know, tens, hundreds, thousands of pounds worth of orders, but they're not going to get paid for 3 months. And your suppliers want paying today. That is a cash flow problem. And you overcome it generally by making sure you keep enough money in the business from today's sales to pay tomorrow's bills. And your budget is your guide on this. It is that avoiding cash flow problems needs planning. It doesn't happen by itself. I think it's so important. We're coming back to the big diagram here. Yeah. All those red boxes where you're spending before the green one when you get paid. And even when you get paid, it's not all yours. You must reinvest. So what are the practical things you can do to help your cash flow? The biggest thing, it's almost a statement of the obvious, is have enough working capital. When the big check comes in, keep enough back to pay next month's bills. I cannot emphasize that too strongly. This is the key to it. If you're starting up and asking for working capital from a bank, make sure you ask for enough. If you think asking for a big chunk of money is painful, try going back 3 months later and asking for some more because you underestimated what you needed. It does not work. Don't borrow unless you have to, because every time you borrow money, you're committing yourself to the repayments, you're committing yourself to paying interest. Those repayments, that interest, they're not available to you, either to run your business or to spend on yourself and your family. So if you can save up enough money or some contribution towards your working capital, do it. If it means doing without something today, like a holiday or a better car, do it. In my business, I currently run a 10-year-old Ford Focus because I don't want the overheads of a posh BMW sitting on the driveway. My decision. It means I can run my business out of my own cash. There are no rental costs, no leasing costs, no car payments. Think about what you spend. If you can, buy your goods and services that you need on credit. And try not to pay for them in cash. Set up an account with your supplier so you get 30 days to pay. And in a perfect world, you can buy on credit, sell for cash, and have the cash in your hand before the bills are due. Great if you can do it. It's what I call the fast food model of selling. You run a fast food outlet, your customers walk up to the counter, they put their money on the counter, you give them their food, they go away. And you've still got another 20 days before your suppliers want paying for the food you've just sold. That's perfect. In my world, I don't have that. I have to wait for my money because I deal with other businesses. At which point you do have an option, which is to try and negotiate better terms, both with your clients and with your creditors. So if your client says, yeah, we'd love to do business with you, but our terms are 60 days, you can always say, that's a bit tough. How would you feel about 30 days? You don't have to take the first offer. You can ask. The worst they can say is no. but at least you've asked. So be brave, ask. The other one is spend the business's money like it's your own. Yeah. When I'm buying things, I've given you the example that I chose to keep my old car rather than buy a new one. I'm about to buy a new smartphone, and everybody's trying to sell me an iPhone 6 for nearly £600 sterling. And I keep looking at the Google equivalent phones for half the price, thinking, I know what I want, but equally I know what I need. And in business, buy what you need, not what you want. Do buy the best you can afford for tools and materials that will pay you back. But look at the stuff and think, am I buying it because it's the latest gizmo, or am I buying it because it will genuinely help my business? So spend your business's money like it's your own. And I cannot emphasize this last bit too strongly. You must keep your money and the business's money separate. In the UK, it's the law. I have to be able to show our tax people what I've spent on the business and what I've taken out of it. The normal requirement is you have a set of bank accounts for the business and your own personal bank account. And you must be able to show what's left the business and come to you. Because not only does the business pay tax, you pay personal tax on your income from the business. Doesn't it just keep getting better, guys? Yeah. Okay. So the key points of the business money cycle. Yeah. A business uses money to make more money by creating and selling goods and services. Yeah, that's it. Sounds simple, doesn't it? The money used to make money is called your working capital. Okay? The cash in hand, cash in the bank, the money you're going to use to pay your bills is the working capital. When you get paid, the big fat check arrives, you know your gross income. This is the point when you have to pause and think how much of it is mine and how much of it belongs to the business, how much of it belongs to the taxman and the other people. Okay? If you do nothing else, when the check comes in, think about that. Your gross profit is your gross income less your total costs. It's cost you money to get that check in your hand. Remember, you have to deduct those costs. And then that happy moment when you have to hand over a chunk to the taxman, put some back in the business, and the rest is yours. Often get asked, and sometimes when I'm teaching, I ask students, if a check for £100 comes in, how much of it do you think you'll keep in your business? And often people start guessing around 50, 60, 70%, and the answer is more likely to be between 10 and 20 pounds of that 100 will be yours to take away. So as a rule of thumb, you have to have a figure in your mind of when a check comes in, how much of it is likely to be mine to take away. And one final point, only what is left after those costs are deducted is yours. This is your net profit. Yeah. Oh look, how important is it? Important enough for me to stick it on the screen again. You must have separate accounts for your money and your business's money. Otherwise you won't know what you're spending. I think we've all seen in the papers where famous musicians suddenly find, I owe $5 million in taxes. Now, to owe $5 million in taxes, you've had an awful lot of money coming in the door, and clearly they haven't been putting some aside for the taxman. That should never happen to you in your business. Yeah. Which brings us on to the neat topic of budgeting. What we said earlier, it's about looking forward at the future, making forecasts. So at the end of this topic, you're going to be able to understand what is meant by a budget. You'll know you'll understand it if you can explain it to one of your friends. If you can't explain it to one of your friends, you don't understand it. Come back and watch this again. You'll understand how you set up a budget for your business. What do you need to put in there? And you'll understand the need to monitor your budget. so that you know what's going on. What we talked about earlier, you're looking into the future, you're having your best guess about what you're going to earn and what you're going to spend. And we all know that guesses are never exactly right. So, here we go. A budget is an estimate of income and expenditure over a period of time. Typically in your business, it'll be the year ahead. The important word there is estimate. I mean, I know what I'm going to do this afternoon. I've got a fair idea of what I'll be doing this time next week. I've no idea what I'll be doing this time next month. And that's the tricky part of budgeting. What I can do is give you my best stab at what I'll be doing, but I probably won't know exactly till a week ahead. So the learning point there is, as time passes, you'll be more certain about what's happening, and you need to keep an eye on how close you are to where you expect it to be. This is what we'll be looking at. Because it's an estimate, a budget will never work out exactly like you planned. And in the picture here, which we'll come back to in a bit, you can see early in the period, there's a very wide range on the estimates. So I think I might sell $10,000 worth of products, but it might be as low as 5,000. It might be as high as 15,000. I'm not sure. So you need to have those possibilities in your budget. And then as time goes along, am I in the right area? Am I up near the red line? Am I the far side of the red line? The key point is there's no point in monitoring a budget if you don't do something about what you find. Every time you monitor a budget, you should make a decision. The two decisions you can make are, I don't need to do anything, I'm happy with where I am, or I do need to do something because I'm not happy with where I am. Right? The thing you should never do is not make a decision to do something. There's a world of difference between deciding not to do something and not deciding to do something. Hang on to that thought. What do we put in a budget? Loosely speaking, what you expect to spend, what you expect to earn, and if you can, when that's going to happen. So it is this estimate of your future income, your sales, what we call your gross income. Your future costs, some of them are fixed, you know them. You've signed a contract for your premises, you know what rent is due every time. You know what your insurance is going to cost you. You know what your repayments are going to cost you. If you employ staff, you know what your wages are going to be. They are called your fixed costs. The good thing is you know what they're going to be. The bad thing is you have to pay them even if you haven't sold anything in the last month. Yeah, scary, isn't it? Sales go down, your landlord still wants the rent. This is why you need to keep cash in hand, your working capital. Equipment and materials, not quite so bad. Generally, the more you sell, the more equipment and materials you buy. But that's cool, because you get the income from what you sell to pay for them. And part of your selling price is what you've had to buy in to produce the goods and services. And the potential gross profit you have in your budget is when you add up all your gross income, all your costs, subtract one from the other. Hey, it's not so hard, is it? That is a budget. We've spoken about making estimates. And one of the questions is, how do you actually make an estimate about something you're not sure of? And it's this idea of giving a value to something that's going to happen in the future. And if I don't know what I'm going to be doing, how do I do it? And it does come back to this idea of working out what I can be sure of and where I need to form an opinion. Things that you've contracted for. So your rent, the loans you've got to pay, wages, things like that. You've got them written in a contract. You know what they're going to be. You know when they're due. You can fire them into a budget, no problem at all. In my case, I have a contract with a private water company, and I know that each month after I submit an invoice, they will pay me a fixed amount plus my expenses. I can fire that straight in the budget. What I don't know is what other work will come in. But I can say, based on last year's experience, I expect to generate sales of maybe £25,000 in training and consultancy that comes in over a 12-month period. So, yeah, you have to have an estimate of that. If you're not sure, use high and low estimates, but never guess. You must always have some logic about why you're doing it. So monitoring a budget, the final stage. When we've completed this bit, you will understand why you need to monitor it, what we've touched on, how budgets can be recorded and tracked, because if your budget is in your head and in your head alone, you've got very little chance of tracking anything, and what monitoring your budget will tell you about what actions you need to take. So why do you monitor a budget? Because we're dealing with estimates, not certainties. Estimates are never exact. We need to understand how close our estimate is to reality. We come back to our old friend here. At the start of the period, we have very wide estimates. At the end of the period, we have close estimates. Okay? Simple as that. The two key questions you're looking at is, where am I compared to where I expected to be? And what action do I need to take as a result of what my monitoring has just shown me? Am I in a good space? And can I let it ride? Am I in a not good space? Do I need to do something about it? Are my costs too high? Do I need to reduce them? Are my sales too low? Do I need to get out and drum up some business? Those are the kind of decisions you'll be making. And effective monitoring needs a written budget. It can be literally pencil and paper for a simple business. More likely it will be a spreadsheet or maybe an online financial package. But the key point is, however you monitor, your monitoring must always result in a decision to do something. A decision to do something, a decision not to do something. So how do you actually monitor it? You must have a written record. You put in your actual costs and sales as you know them, and you compare them with where you expect it to be. And I will show you an example of how I do it in a bit. You must have records. They must be written. If nothing else, if you're not around and you're the only person who knows what your budget is, how can anyone else know what's going on? I run my business off a spreadsheet. I pay my accountant to do the taxes, but my actual budget I run. There's a difference. You may choose to use an online accounting packages. There's some very good free ones around, and some charge you a fee. You can decide what's appropriate. And equally, I've seen people run their budgets off a smartphone app. Tough, but with a big screen smartphone, it's an option. The only thing I would say is, if you are keeping your records electronically, you must back them up. If all your records are on your smartphone and you lose it or it breaks, that's your records gone. So backing up electronic stuff is well important. And I keep coming back to it because it's so important. The question you ask when you look at your spreadsheet or your financial package is, where did I expect to be at this moment in time? Where am I? What do I need to do? Now, it doesn't show up great on this screen, but hey, in principle, it's a spreadsheet. In it, I record a month, who the contract is with, the piece of work that I'm doing for them, what's the gross amount they're going to pay me. I've also got it set up to do a little calculation, so it'll pull out the amount of sales tax I have to pay and an estimate of my personal tax and the business tax. Then in the columns on the right, it adds up for me, what have I got contracted, what have I been paid for, what's outstanding, have I paid the right amount of sales tax, and then finally at the bottom, how much is mine to keep. Nice and simple. Not everyone's great with spreadsheets, but most of us have friends who are. So if you're not cool with it yourself, go and find your friend to help you with it. So in a final summary, the key points from today. Money is the lifeblood of your business. Without it, your business will die. If you mishandle it, you can kill an otherwise perfectly viable business. It's possible to go bust with money in the bank and a full order book. Don't let it happen to you. The key point is when the big fat check arrives, thinks, what do I need to keep back to pay my future bills and pay my taxes? Only what's left after that is mine. Yeah. When you're running your business, it costs money to produce products and services. You have to keep enough money back to do that. Even when the check arrives, that's only your gross income. The profit to the business, as opposed to the profit to you, you have to take off all your costs. Remember to do that. And the two key monitoring questions: where am I? Where did I expect to be? Based on what you find, you make a decision. Either it's cool to do nothing, or I need to do something. Reducing costs, drumming up new business, looking at new business areas, thinking, is my old product or service reaching the end of its life? Has it hit its sell-by? If it has, you're actually a bit late to go back into your research and ideas mode, because you should have done it already. But if you find you're heading into that position, now is a good time to keep even more money back for your ideas and research. Having had this gentle canter through, hopefully now you understand the money cycle and the key financial terms. They're not particularly complicated. If people start throwing around money terms that are more complicated and you don't understand them, stop and ask them what they mean. It's cool not to know. It's far better to ask the question than be part of a conversation you don't understand, because this conversation is about your business's money, and ultimately your money. You need to understand it. You need to understand how you set up a budget. What am I planning to earn? What do I expect to earn? What am I planning to spend? What could I spend? A spreadsheet works great. Other solutions are available. And you must absolutely keep an eye on these trends at regular intervals. Every Friday morning, I put an hour aside to sit down and go through my own personal budget. Often it only takes 10 minutes because nothing has changed. But I always put that time aside. Rule 1 in business, there is never enough time to fit everything in. If you don't put it in your calendar to do it, you won't do it. Then all of a sudden, bills will start arriving that you didn't expect, and you won't have the money to pay for it. That would be a real shame. If you feel really inspired by this, I have written a blog post. blog.windmill.insights.co.uk/2013/09. I'll be happy for anybody to contact you through the blog, but as we said at the start, there is a question and answer session to follow. So on that happy note, does anybody have any questions?
Okay, if there aren't any questions, I've had some in advance. One of the questions was, lots of my sellers prefer it if I use cash instead of credit. How could I persuade them to let me start buying on credit instead? There is no easy answer. All you can do is ask. They may say no. At which point you have to make a decision. Is there somebody else I can go to for this product who might give me better terms? Or do I have to accept the terms I've been offered? A similar question was, what tips do you have regarding negotiating better terms? How soon is it acceptable to start doing this? So my reply here is, it costs nothing to ask. When you first go to a supplier, then is a good time to ask them about their terms. The worst they can say is no. Just be careful not to say things like, if you don't give me better terms, I won't buy from you. Then you find, of course, you can't get these goods and services from someone else. So that's an important question. Okay, looking at some of the questions that have come in, can we have a copy of the presentation? The foundation will be sending out the links to this presentation. Another question was some recommended software. I personally use Microsoft Excel, which does this job very well. If you can't afford Excel, there are free equivalents. I particularly like a free package called OpenOffice. It has a spreadsheet that is compatible with Excel. You can send it to your friends. Another question, can I have two separate budgets for self and business? I think you absolutely must have a personal budget and a business budget. So no problem with that at all. A very important question that's just come in. How can I manage late payments from clients? In Kenya, government procurement is 6 months before payments. As a startup, how do I stay afloat? It's very difficult to manage a client like a government that doesn't pay you for 6 months. One of the questions then is, can you afford to do business with this client, or are you better off trying to find a business elsewhere? I'm sorry, there is no easy answer to being made to wait for 6 months. There's another one here. Can I keep 10% aside for the rainy day after personal savings, taxes and bills? Yes. Putting money aside for the rainy day, what we call a contingency fund, is very much a good idea. So yes, by all means, put things aside. Looking through some other questions here. The question here, I've won funding to develop a product. How would I raise initial funding as the charity pays the supplier post redeeming the funds? Sourcing of initial funding isn't one of my strengths. I would normally say in this situation, if you can show that you have a grant, a bank manager will look much more favourably on a request for your startup funding than if you have no such a contract in place. So with the funding agreement, you should position to get a loan to give you the you need. Coming back to some of the previous questions, we have one here. As the owner of the business, is it okay to delegate the task of monitoring the budget to somebody else? Or is it solely my responsibility? Well, the question has the two key points in it. As the business owner, you are responsible for monitoring the budget and making sure that you comply with the law, but you can give the task of doing it to somebody else, like an employee or an accountant. And that's what I do. I keep an eye on my own budget, but all the legal payments, the taxes, things like that, I let my accountant do it for me. There's another question here about the taxation of money coming into the business, is it the gross profits or the gross income that gets taxed? It is the gross profits that get taxed under UK law. I can't speak for anywhere else, but in the UK, you only get taxed on the amount of profit you actually keep after you've paid all your bills and expenses. And I'm guessing that most places that will be the same. We also have a question in terms of record keeping. Which would you say is the best method? The person asking the question generally works with a pen and paper, but knows that other people use spreadsheets. I would always favour an electronic solution like a spreadsheet or an online package, because then you have a record you can share with other people. If you do it with pencil and paper in a notebook, you only have one copy, and if you lose it, your record is gone. If your accountant wants to see a copy, it's difficult to make copies of. So that can be a bit of a problem. Coming back to the online question, somebody has asked, how do I forecast sales on training workshops? This is difficult. All you can actually do realistically is look back to last year and say, what did I do? And plan initially to work at the same level, unless you really believe that your business development work will result in an increase in sales. You can put in an increase. If you think that, well, times are hard, businesses are cutting back on sales compared to last year, on training compared to last year, I will put in a lower amount. Comes back to this idea of using high and low estimates. There's another previous question asking, is it better to overestimate or underestimate your future income? This questioner says that they tend to err on the side of caution, but the worry is that this could be holding them back because they go around thinking they haven't got as much money. In general, I'm inclined to be cautious, but as your business grows and develops and you get more experience, you will find that your estimates become more accurate. So yes, do err on the side of caution initially, and certainly do not commit yourself to any contracts that rely on a high estimate. Okay, another online question. What is the difference between a financial forecast and a financial model? The financial model is the framework you use to make your forecasts. So the simple financial model is I need to understand what income I expect from my sales. I need to understand what it's going to cost me to make those sales, and I need to understand what taxes and other outgoings I have to pay and what that will leave me. The financial forecast is when you actually put your numbers into that framework. So one way of looking at it is that your financial model is the spreadsheet you construct, and the financial forecast is the numbers that you put into that spreadsheet. Here's another prior question. Is there any scenario where using my own money in relation to my business is okay, or is it something that is never recommended? The short answer is that your money is your own. You've paid your taxes on it. You can do what you like. You can buy things for the business, I mean, what you're doing in accounting terms is lending that money to the business, and the business owes it back to you. Now, this is called the owner's fund. What you must have is a record that you have put money into the business and that you will want it back at some stage. If you, as I said, you are lending it to the business, not giving it, and you want it back. Okay, another online question just before we finish. For a social business wanting to give 10% of the profit to a social cause, do I calculate the percentage based on the net profit or the gross profit? My opinion is it should be the net profit, because the gross profit isn't all yours to keep and give away. So if you do calculate a percentage based on the gross profit, you have to pay it out of the net profit. And if your net profit margin is only 20% and your gross profit margin is 60%, you're going to be giving away a lot of your money. So my advice here is to calculate the percentage on the net profit. And the final question, and I think something that's dear to my heart, is how frequently do you recommend monitoring your budget, weekly or monthly, and can this vary depending on the type of business you run? My personal thing, as I said in the webinar, is I put an hour aside every Friday morning, and that on that Friday morning I will just go through my budget. Often it only takes me 10 minutes because not much has changed. What I would say is, if you are running a small or medium-sized business, this is good practice. You should always have an idea of where you are compared to where you expect to be. Rather than saying, should I do it more frequently depending on the type of the business, there's also a rule of thumb that says when you are starting your business, you should keep a closer eye on your budget than when your business is established and you fairly well know what's going to be happening for the next few weeks ahead. So the earlier you are in your business, the more erratic your cash flow, the closer eye you need to keep on it. And a final question. Question here, how do you modify the finance management for a business that is already in existence? From what you have shared, I need to make a lot of corrections to my finance management. How do I start with a business that is already in existence? My advice here is start from the beginning again. It says look at the principles of budgeting and cash flow and design a new system from the ground up. Because if you start trying to change the old system, it's going to be very difficult. And then at some point in time, when you have your new system developed and tested, at one moment in time, change over to the new system. Don't try and run the two in parallel, because that is very difficult. And the final question is, please share your blog post link again. The blog post will be included in the material in the webinar, which will be hosted on the website. So that seems to be all the questions. So I hope you enjoyed the webinar. It will be hosted on the Foundation's website. Do come back to it if you're not sure. Something I said at the start, that you will know you'll understand budgeting and cash flow when you can explain it to your friends. If you can't explain it to your friends, you don't understand it, come back and do the webinar again. So with that, we're out of time. It's been great talking to you, and go away and apply what you've seen today. Thanks and goodbye.